This is Ashish with Investor Friendly CPA, and today we are going to talk about 83B election. So if you're watching this video, I'm pretty sure you kind of know what 83B election is, but what I want to accomplish with this video is talk about maybe three things. One is what is 83B election, and can it help W2 employees mitigate some taxes, and if you missed the election, what could you potentially do to fix or get same kind of results as 83B election, right? So first thing is 83B election. This can get complicated, and there, I'm sure you guys have heard about, stock options, stock grants, and something called RSAs and RSUs. There's so many things, right? 83B election does not apply to stock options, and they will not also apply to stock grants if there is no vesting schedule. So very simply, it only applies if you have a stock grant, and if there's a vesting schedule, this is going to apply to you. So, and the overview and basic concept is this: you want to pay taxes when your stock prices are low when it's granted, rather than when it appreciates after it vests. So basically, putting numbers to this, if your company gives you stock grant and the value of the stock is $1 right now, and then when it vests, let's say in 4 years, the value goes to $100. Do you want to pay tax at $100 or $1? And if you think your company is going to go up, then yes, it's always better to pay tax at $1, and this 83B election is gonna make you do that, right? So let's talk about, is it helpful for W2 employees? Yes, that's exactly what it is. I get questions from these high net worth individuals and who might not have any other businesses and might not have any real estate. How can they save money in taxes? It's very hard for individuals without any other business activities to save taxes, but this is something that can really impact your taxes if it's planned correctly. So who does this apply to? This will apply to employees of the companies who are, let's say, startups, or they can be they're trying to go public. If they're trying to go public, your stock is going to go up. If it's a startup, your stock might be valued $1 today when you form the company and when you hire people, and then you wait 4 years, it's going to be $100 or $2,000. I have a client whose stock, I don't know how much, there's no word for that. It went from $50 to $600, one stock, and he had millions of it. So think about that. How powerful is that when you have a stock and you get taxed when it's very low, rather than waiting for it to appreciate and vest and then pay taxes. So the basic requirement is that you have to file the election 30 days after your stock is granted. So people miss this all the time. People don't even know what it is, and they will pay hundreds and thousands of taxes. So you want to always meet the deadline. That's the best way to avoid taxes, right? But however, if you missed it, what can you do? And that's what I want to focus on in the last part of this video. There are potentially three ways. There are more ways, but the basic and easily understandable through this video is three ways you can try to get this right and get the same implication. First way, the easy one, is this: look at your grant agreements. Sometimes you might not have gone over the 30 days mark, because whenever the grant agreement is put out there and it has to be approved by board of directors, it might not have been approved by them. It has to go through a lot of hoops to get it approved, and the actual grant might not have been approved. So make sure you take the dates and ask your HR and company to confirm if you have actually if you have gone over the 30 days. Now, let's say you went over the 30 days. Are there any ways to mitigate this, to get the same tax results at 83B election? And potentially yes. So just to recap, right? The whole purpose of 83B election is to make sure you get taxed right now on the lower valued stock rather than higher value stock when it vests. So can we do something to make your stock that you missed your deadline get taxed right now? Yes. You need to work with your company. Ask them, hey, can you remove my vesting schedule? If there's no vesting schedule, then you get taxed right now. Like I was telling you before, if you get a stock and there's no vesting schedule, this 83B election doesn't even come into play. You're just like normal, you're getting paid through stock rather than cash. So you're gonna have to pick up the income. So you get the income and stock to this company, and you miss the deadline. What you could ask, and this usually applies for new startups, okay? They can have you, have you not have a vesting schedule so that you are, at the same position as filing 83B election. It's a management decision, and if you're a highly valuable employees, or if they value the employees, sometimes I've seen some new startups with there's no lot of what do you call it, those a lot of hierarchy will go through to actually make this possible. The second way and more sophisticated way is this: if they don't want to get away with the vesting rights, then what they can do is they can give you something called transfer rights and still keep the vesting schedule intact, so that you will have to recognize the income because you have a transfer right, and 83B election doesn't come into play. Basically you're in the same position as getting stock, and it's being substantially vested to you. I know there are a lot of words, and it gets complicated, and I tried to explain this as easily as I could in a simple language. If we are talking about thousands and thousands of stocks grants that you're getting, please bring this up with your tax advisor, and then ask them it is worth to making this election for you. And this is one of the best way W2 employees who fit in this startup and tech companies and companies that trying to go public will highly benefit from this strategy. So if you found this video helpful, leave us a comment down below, or if you have any questions, feel free to reach out to us through any of the links that's listed below, and we will get back to you and answer your questions. We will be adding a lot more content to our channel, so I will see you in the next video. Thank you.